Welcome to episode 6. Of course, we are in season number 1. Thank you for tuning in this week. Again, it's been a little while since we connected here. Again, another packed show. I guess when you only do episodes once a week, there's a lot to talk about. So once again here for the Positive Friday, December 1st episode, it is absolutely jam-packed. Now, before we get into the nuts and bolts of this episode, I just want to get a couple of key messages off to you at the start here. I don't want to bury them too far. This is new. I'm going to try to do this every week. Like I said, I am workshopping different segment names, different themes. But if I have something important or maybe newsworthy, I guess I feel like I should get it out nice and early. So, before we even get into the nuts and bolts of the episode, two things. Number one, okay, we'll start with urea. So episode 4, I think we had permission from Josh Linville to review his November commentary, and the message in episode 4 was to not get excited about buying urea. Now, that was actually a message from your retailers as well across the prairie provinces, which is neat to see because that patience has saved you approximately $100 a ton, maybe $120 a ton, depending on where you're located. And what I'm referencing is the price of urea. I've got a low coming in now on the Alberta-Saskatchewan border, $6.95 a ton. That is for movement towards that January, February timeframe. That number was like 820 a couple of weeks back in episode 4. We have for movement here in, let's call it December even, we have numbers that were 780. Now that's right at that 700 level, just below. So pretty good savings over the last couple of weeks. So hopefully you were able to hold off and take advantage of some of these lower pricing. Now, as of recording, I don't have Josh's latest update when it comes to the urea market. I'm not sure if it's still, practice patience or to buy. Let's just do some quick math here. I'm just thinking that if we go 695 and you had an 820 offer, it's a 15% savings. I guess you got to take a harder look at it now, right? So I will try to update followers through the website newsletter and see if I can get you guys some guidance on that. I've got a few messages out to some contacts that typically help me with fertilizer purchase decisions, and when I hear back from them, I will pass it along. But in the meantime, your retailers doing you a solid here, saving you 15% over the last couple of weeks. So let's give them a slow clap on the podcast. Okay, second key message is these darn wheat basis contracts. It's like Mike Tyson said, everybody has a plan until you get punched in the face or punched in the nose. I can't remember the exact quote from Mike Tyson, but what I'm referencing is spring wheat market dipping below our support line. We were holding consistently, the March contract, call it like 725. Well, we fell through that all the way to $7 this week. Now, as of recording, it's trading at 729. So we're closing right at kind of a minor resistance level here. So fingers crossed that we can actually break through this and get back to this upper trading range. I'm a little bit nervous now that that we are going to trend lower here. I don't see a whole bunch of positive in the wheat market except for some fantastic Chinese demand for U.S. wheat. Now, again, I feel this is important to get out there. I was had lots of conversations with farmers and some grain buyers over the last couple days, and the one thing you can do is you can phone your grain buyer and you can just ask, and they won't all tell you the answer, but you can ask them like how many tons are at a set price. And one location in Alberta said that they had over 10,000 tons of spring wheat targets at $10 a bushel. Now, it doesn't mean that it's not going to trigger. It's a train, not quite a train worth of wheat. Like, it's not huge at the end of the day. But let's imagine in that area, there's 5, 6 different grain companies. If they all have those targets in at $10 as well, which I would say is quite likely, and then all of a sudden you take that number and you spread that across central Alberta or Saskatchewan. I don't know how many thousands of tons it could be at $10 a bushel. And that number will be different in each region. It might be 9.50 in one spot or, $9 in another, whatever it is. But um, just be a little cautious here with your targets, because if they hit that $10 target at that location, they are buying a whole bunch of wheat. And to me, I just noticed with futures rallying here a little bit the last day or two, basis levels got a little bit worse. So they're certainly not going to make it easy on you out there. So again, if you want to keep your target at that level, that's fine. But I'm just not optimistic that you're going to have success unless there's a major event that comes across the wires here and changes the direction of the wheat market. If you have a wheat basis out there, again, if it's for winter delivery here, stay on it. If you can catch a 25-cent pop here, worthwhile pricing that, in my opinion. If it's for spring, you got time on your side. All right, those are my messages that I wanted to get out here at the start of the podcast. Now, let's get to the nuts and bolts. I want to thank our sponsors, Pioneer Seeds. We actually have a question that came in regards to oats. So Pioneer Seeds, that's Tower Farms, Jacob and Becky Boychuk. They are giving us canola seed, P516L, to give away every month. And we've got a new entry now today. We'll get to that in a little bit. If you want to get in touch with the show, you can always text us 1-855-606-1889. You can find us on Facebook, Instagram, Twitter, and of course, you can always head to the website. Now, you'll notice that I'm obviously learning processes every week, but we didn't have the video go out last week to Apple Podcasts, and that is because the file was too large and I did not have the intelligence level to figure out how to get it onto the video onto Apple Podcasts. So the videos now are going to certainly live on our YouTube channel. I believe we have one subscriber to our YouTube channel, so thank you, Trent, for that follow. I appreciate it, man. But if you want to see the video, if you want to see my smiling face, or if you want to see the studio, not super exciting yet, but I do have new lights. I've got a new camera. I've got probably, sounds like, some sponsorship announcements here in the very near future. And so if you want to see the studio, that's where you'll be able to see it, is on that YouTube channel. Of course, I'm going to dress it up nice and Christmassy this weekend as well. And we'll see. Maybe I can do some fun stuff with the studio. So you check out the YouTube channel. So yeah, that's where you can kind of find us. I will try to put them on Apple as well. Just give me a couple weeks to get it sorted out. So hopefully we got video on Apple and YouTube. And then, of course, your podcasts. Your audios will be on all your podcast channels. Now, still struggling with Google, working on it. All right, positive moments of the week. It is Positive Friday. So a cool one for us is we did reach over 1,000 listeners already this month, where podcast is like 3.5 weeks old. And so to reach 2,000 ears, I'm assuming, on that one, is pretty cool. I have no idea what I had no idea what to expect. I still don't know what to expect when it comes to who's tuning in. But I thought 1,000 was a cool number, so that's my positive moment there. The other positive moment for me is it's been a little bit stressful on many farms over the last couple of weeks here in regards to selling crops, selling grain, and generating cash flow. So I've been had lots of people reach out, or quite a few people reach out just to talk over their scenarios. The stress level was high because large cash flow was needed. So large decisions had to be made. And there's always that fear of making the wrong decision. And so my positive moment is to see farmers go through that process of creating a plan, executing that plan with confidence, and making that business decision, and the relief that and the weight that was lifted off them after that exercise, extremely positive. Again, if you need to generate cash flow, obviously you need to sell grain, but there are ways to participate in markets. I know many analysts across the prairies. Their favorite thing right now is to recommend a sale and then replace it with a strategy to capture upside, potential future upside. That's in just about every recommendation that goes out now. If there's a futures market that's traded there, and it makes a lot of sense. We've had a lot of volatility. We are in a downtrend right now, in my opinion. But you never know what could happen with everything going on around the world. Even reports last night that the Venezuelan army was gathering along the border, and potentially another conflict here, war brewing. Lots of stuff going on out there around the world. So of course it makes sense to figure out how to stay in some of these markets. So it's that secret sauce, if you want to maybe call it that. So great to see confidence in that business decision, getting money in the bank, and relieving that stress. All right, so focusing on the farm these days, moving along here. Again, you all are doing your own thing, and it's fantastic. But for us, our family farm, it's all about the numbers right now. Again, just focusing on some office time. I just want to encourage you. I know many of you are extremely skilled in mechanics and fixing things, and that's very important and has to get done. Lots of greens, a lot of work to do everywhere on the farm, but don't forget to take a little bit of office time for yourself. It might be doing some reading, or some studying of some sort. It might be updating orders, updating budgets, whatever it is. Take a little bit of office time for yourself, because you are running a multi-million-dollar business, and it will pay dividends for your business. All right, I know it's all important; it all has to get done, but don't forget that little bit of office time. Other thing that we got going on is, of course, like everybody else, we've been invited to some of these big sale events going on in December from your local retailers. So we're just getting organized on what we've already committed to, what we've bought, and what's left to book. And then number three for Focus on the Farm is very much setting our targets to execute the next round of our 2024 fall sales. And I know a lot of you aren't in that headspace yet, but don't lose your eye on the prize. There's margin there to grab next year. Keep that a focus. I know it's going to be a dry winter, and we don't know what we'll get for conditions next year, but you can bulletproof yourself as well. So lots going on the farm right now. Lots of business stuff to get covered off. Alrighty, let's keep moving along here. We have a question that came across from Brad. So Brad is he farms in I call it that east central Alberta, just outside of Edmonton. Brad is also involved with the Prairie Oak Growers Association. I believe he is president. So I will be addressing the president here shortly. But let's see what Brad has to say, and see if I can get him an answer. So let's take it away, Brad.
Good morning, Ryan. It's Brad Betker here with Prairie Oak Growers Association. We're about to have our AGM next week in Winnipeg, and on that note, thought maybe I'd just ask you what your thoughts are on the oat price right now, what is being shown for oat prices for 2024, especially given your last episode where you've picked oats to be your number one crop that you would put in the ground. Thanks so much.
So you didn't want to give me an easy one. I can see, Brad. You definitely are making me work for this one. So, all right. So prices for oats. I am friendly towards oats for the 24 cropping plan. Um, and I'll tell you a few reasons in just a second. But if we want to talk about prices and what's recently traded, so we have, let's start with the Peace region. Let's go up north. 450 for fall of 2024. That's picked up on farm. That is in line with feed barley values. Alrighty. Central Alberta, 5 to 525 delivered for fall of 24 oats. Again, uh, in line or slightly better than feed barley values. East Central Saskatchewan, we were getting some quotes at 5. And if you want to push that into 2025, into the winter, 550 a bushel for oats over there. Southern Manitoba, nothing's coming across the screen quite yet. I'm sure it's out there, but I couldn't find anything this morning when I was checking around. I do expect that you'll see stronger offers for gluten-free oats or some of those specialty contracts out there. But here is why I'm friendly to oats. I know that you didn't really ask this part, Brad, but here's some of the things I'm watching. Very tight carryover expected from the 23 crop into the 24 crop. Very tight into next summer. Okay. So that's going to mean that buyers are going to get more aggressive on securing acres. Traditional oat growers have stepped back from planting oats, especially in 2023. I don't know if these bids get them back in the mix. In chatting with some growers, it's been kind of like a 50-50 right now. I believe that for oats, you'll have second and third chances to price your oats before a significant collapse. So if we want to look at maybe like a seeded acreage report next spring, that could influence prices lower. I believe you'll have many chances to price your oats before it collapses, and you're not going to have that same comfort level with wheat or barley. And I believe that some of these oat contracts will have an act of God as well, or in if you want, you can certainly make your own act of God in your contracts. You can go and look at oat futures and go and see what you can trade for some options there. Options have been trading in oats over the last couple of years, so you can certainly make your own security blanket against a contract buyout. And of course, you can also, if conditions are right, it's a crop that you can supercharge your yield. Again, you need the right conditions to present themselves, but to move an oat crop from 100 bushels to 125 bushels per acre, or even greater in many circumstances, it gives you a chance to go after that yield in the right conditions. Now, I know wheat will do it as well, and some of the other cereals, but oats, you can really see that percentage grow significantly if the right conditions present themselves. So I like that opportunity. Now, I'm also not friendly towards the barley markets, generally speaking. And wheat at the moment, I think, is in a continued downward trend. I don't know for how long yet, but I could see average price of wheat on a farm across, call it Saskatchewan at $8 a bushel when you're all said and done marketing your 2024 crop. I could see that being a real number, whereas oats is probably 5 or north of $5 a bushel. All right, so you guys can do the math and see if it makes sense for you. But heck, barley prices, feed barley and oats are the exact same price in some scenarios. Alrighty. Hopefully that answers your question, Brad. Thanks for tuning in and getting that one to us. And of course, thank you to Pioneer Seeds. Brad farms just outside of Edmonton and now has his name entered to potentially win a bag of P516L canola seed. We're going to draw for that right before Christmas, that first bag, and then we're off to the races every month after that. All right, let's go to grain prices and other stuff. I have a notable here in my notebook. 2024, fall of 2024 maple peas. We had I'd call it a low ball offer a few weeks ago of $13 a bushel. Now we have a real number of $18.50 a bushel picked up on farm. Again, maple pea seed, hard to find, but that one's raising some eyebrows. For some reason, I had penciled in 18 a while back, and looks like I was a little bit shy to start. So 1850 for those maple pea growers. Other than that, for notables, I just want to highlight lentils are hanging in, large greens, 72 cents picked up on farm, small greens. I'm seeing a 65 on that, and red lentils holding as well. There was a high of 40 cents in Estevan, Saskatchewan. So lentils definitely holding on, which is rare right now because, generally speaking, just about every other crop has given up some ground and slid back here just a little bit as well. So nothing really exciting that stands out to report. And of course, your crush plants filling up. Export demand for canola has been weak. And so you've got crushers now putting a sold out sign for January, February. Haven't seen a March yet, but I should take a peek into Yorkton and see what's going on there. All right, folks, we are going to move over now to two guests that have joined this week's episode. We've got Ryan Copithorne with Cows in Control. So for our cattle farmers out there, we got some updates on the cattle market, and I also have a feed update from Marketplace Commodities. So let's go over to those two guests next here, and we'll wrap up the episode after we get done with David from Marketplace Commodities. All right, folks, I've got Ryan Copithorne joining me on this week's episode of What the Futures. Ryan has a great little business going, Cows in Control. He's going to talk about it here in just a minute. But anybody that has known me or worked with me in the past knows that I have no clue when it comes to marketing cattle or any animal, we'll say, but cattle for sure. I am a clueless individual in that area. And I promised I would find some experts to answer questions. And here we are. We've got the cattle guy with us, Cows in Control, Ryan Copithorne. Welcome to the podcast. How are you doing today?
I'm doing fine. Thank you very much.
Awesome. I have been just telling everybody, every week that winter has not arrived at my house yet. I'm just outside of Edmonton. And of course, it tried to snow, but it's long gone. And here we are, December, and it's like +6 outside. What's going on in your neck of the woods? Where are you living? What's going on with winter? Let's start with that.
Well, I'm just west of Calgary here, and it's a warm brown winter. It just reminds me when I was a kid in the 80s. It just feels like one of those kind of winters where it stays brown all winter. We're definitely dry here. We could sure use some moisture by the spring, but I guess we won't complain about the warm temperatures for now.
We'll try not to. That's for sure. Cows in Control. Tell us a little bit about your business and what you're getting up to each and every day. What are you working on?
Yeah, well, Cows in Control is a business I started a few years ago, and my background is I'm a fourth generation rancher, and I ran the family business for years, and did most of cattle, like cow production and backgrounding and feeding for a good part of my career. And the last few years, I got into this. I started this business called Cows in Control, where I realized there was a shortage of people in the industry servicing cow calf and smaller feedlots in terms of managing risk and managing markets and knowing how to protect prices and things like that. There's lots of guys on the grain side, and there's a lot of the bigger feedlots would be doing that risk management, but you really don't see it in the cow calf space or the backgrounding space. So I built a little company called Cows in Control where I work with producers and help them manage those things.
Yep. Awesome. Are you where's your client base? Are they across the prairies? Who's your kind of the average farmer you're working with? What are they up to?
Yeah, I got clients pretty much spread out all over, really. I've got them in Alberta and Saskatchewan, Manitoba, BC, even a client in the States. But I would say that there's no real typecast as long as you're kind of a producer, whether it's a cow calf producer or small backgrounder or feedlot, I can accommodate that, because what I'm doing is just writing newsletters every week on what the markets are doing and helping people make decisions on which cattle to own and strategies for those cattle and how to lock prices in and that type of thing.
Okay. How about on the feed side as well? Are you looking at feed markets and giving any advice around that, or how's that
A
look?
little bit. I look at anything that affects the price of cattle. And so that could be, it could be the futures market on cattle, whether feeders or live cattle, or it could be corn futures, which affect our grain prices, or it
Yep.
might be Canadian dollar, or it might be anything on the input side, like natural gas, fuels, that type of thing that could affect our costs. So I'm always trying to find ways to protect our prices, but also to manage our costs and our input costs and such.
Awesome. Okay, great. Well, let's dive into some of these factors then. Cattle futures have been quite volatile over the last number of days here. What are you picking up on the future side?
Well, yeah, I mean, definitely the futures have dropped 40, 50 cents since September. Our cash prices in Canada haven't dropped nearly as much because we were sort of trailing the futures market all year anyways. So really what happened is the futures market came down and sort of connected with us where our cash prices are. But it's been a seasonal decline. Like, this is a very typical time of year for prices to drop off into what they call the fall run, when most people are marketing their calves in the fall. But definitely the last few days has been very volatile. It was kind of a Black Friday sell-off where the futures market dropped off 7 cents on Friday, and then it dropped off another 7 cents on Monday, and it looked pretty dire there. And then, of course, yesterday that market rebounded 8 cents, and today it was kind of undecided, a little bit up today, but definitely there's some turmoil in the market. There's rumors about what's causing all that, but I think it's overall the decline in futures has been very seasonal.
Okay, so nothing really stands out except for that seasonal pattern right now.
Well, I think there was some volatility in the last few days. I mean, there's speculation that's about some of the insurance programs that they have a livestock risk protection program in the US, which is similar to our livestock price insurance here in Canada. And I think there was some speculation that there was some troubles in that system, because whenever they offer insurance, they have to take a futures position to protect their insurance. And I think there might have been some troubles in the underwriting there, but right now it's all rumors and speculation. So I don't want to start spreading gossip, if you would.
Are you, from a hunch perspective or from your research, are you kind of optimistic in the short term on the futures side recovering, or do you feel this is a kind of a neutral sideways trend we're entering, or is there potential to leak lower? I guess where's your head at for that?
I really believe we're in a long-term bull market, and the supply side of this business is extreme. We're seeing no holdback whatsoever of heifers, and we're still seeing the cow slaughter high. So until we see that holdback and until we see ranchers start building inventory, I don't think this is going to end anytime soon. People are worried that it's going to be like 2015, 16, where we had a bull market and then it just disappeared one year. And I don't think that's the case this year. That being said, I think there could be some chop and slop here for the next, I would say, reaching out probably to March. We could see some sideways pricing and a lot of up and down and chops and volatility, because there are a lot of cattle on feed, a lot of it because of the drought, and there were some imports in the US that were driving placements up. And we've also got, we've got a lot of dairy cattle in the system and such. So there is a potential for some sideways action here, but I think longer term it's bullish.
Okay. That's a good thing. That's a good word. So awesome. Okay. Switching gears now to how cattle are selling here. Calves or bred cattle. I don't know if I'm saying that all correctly. I know my my buddy that has cattle not far down the road from where I live, he was quite disappointed a couple of weeks ago because his calves went out a week after a substantial decline in the market. Do you want to touch a little bit on what we're seeing at the sales here?
Yeah, our cash prices definitely haven't fallen as far as the futures, as I mentioned earlier, but uh, the calf prices I would say, are holding kind of steady now.
Okay.
They've had their decline. They were, a 5-weight calf was well over $4 in September, and now they're down in the 380s on average. So they have come back a bit, but I would say they're holding in fairly well. And when you look at, we've got some bred cattle selling now, and this is the season for bred cattle to sell right now in November and December, and they've kind of been all over the map. Like you're seeing cows as cheap as $1,500 and as expensive as $4,000. And I would say like the average on those cows is probably right around $2,500. And bred heifers are the same. They're anywhere from $1,500 to $5,000, and they're averaging somewhere around 34 or something like that. So overall, I would say the averages are good, but there's a lot of range in them, and it kind of depends. You have to be very careful with your marketing. Make sure you don't just hear the coffee shop rumors of $4,000 cattle and expect that's what you're going to get, because the range is wide.
Any reason specifically for that wide range, or is that fairly standard? Anything stand out on the range?
I think it's a thin market. I think there's a thin amount of buyers right now, and so if there's a demand for a certain amount of cattle, they'll pay up for them. If it's the right cattle, they really want them, they'll pay $4,000 or $5,000 for a bred heifer. But if you run them through the auction mart and the buyers aren't there or don't have an appetite for them, those cattle can go less than slaughter price. So you have to be really careful, make sure you have a market before you bring these cattle to town.
Perfect. All right, that's great. Okay, we were chatting a little bit earlier about cost of hedging or insurance costs, price insurance costs out there. Anything you wanted to mention specifically in regards to hedging your cattle right now?
Well, yeah, for sure. I mean, most people still aren't using these price risk tools, whether it's insurance or futures or options or those type of things. But even if you are going to use them, those costs have gone up as these cattle prices have risen and as volatility has increased. The price to hedge cattle is expensive now, but it seems expensive compared to historic perspectives, but compared to the price of the animal, it's still the same or cheaper. So where you used to pay like $40 a head to hedge an animal, now you're paying $80 a head, but your animal's gone from being $1,800 to $3,000. So it's just the new reality we're in. We're going to have to get used to the fact that hedging is expensive now, but the swings in these markets are huge. So $80 a head for a market that could move $500 a head, it's still reasonable. So,
yeah, for sure. Okay. This is all fantastic stuff. I'm going to throw a bit of a wild card at you as well, and I hope to get these folks on the program here in the future. But I saw something about an inventory building loan or something like that from, I think it was ATB. Have you seen any incentive out there to help farmers grow those herds in these times?
Yeah, the ATB loan is trying to keep the business intact by giving basically it's only interest only loans on bred cattle for the first number of years, and it's really just to keep the cost down for people that want to expand their cattle herds right now. So they're looking at the industry and trying to make sure that people are building this herd, because if we don't build this herd, it's going to continue to shrink, and we're going to start to lose infrastructure. So they're definitely taking an aggressive stance, which is good. And I think we need to see other initiatives as well to make sure that we keep this herd up, because our herd is still shrinking. So it's a concern.
Yeah, for sure. Okay, great stuff. I know you're a busy guy. I've got two final ones for you. These are easy ones. Number one, where can people get in touch with you?
Well, I have a website, cowsandcontrol.com. And on that website, you can sign up. I have a free newsletter, so anybody can sign up for it. I put it out monthly, and it's just sort of general commentary on markets and cattle industry and such. And through that website, you can get connected to us if you're interested in becoming a client. And a client is a little more in depth. But that's probably the primary way to get a hold of me. Otherwise, you can get a hold of me through social media.
Awesome. Perfect. And you've got some speaking engagements coming up. Anything you want to highlight on the tour that you're doing?
Yeah, I just finished a couple, but I'm doing one tomorrow in Wetaskiwin for the economic development up there. So there's a group of producers up there, and then but I finished a few this year as well. So I'm getting a few more speaker opportunities where I can kind of tell about what I do in the business and talk about markets in general. So yeah,
Perfect.
We'll look out to see what I get in the new year. So
awesome. Well, that's great. I really appreciate you jumping on the show. I look forward to having you come on, every month or so, or whenever there's something that certainly needs to be talked about. We can certainly get together sooner than that. Really appreciate your insight. Everyone knows how to get a hold of you now, and we'll certainly point them in your direction when they want to chat cattle markets. Thanks again, Ryan. Really appreciate it.
Yeah, I really appreciate the opportunity. Thank you.
All right, take care. All right, we just heard from Ryan Copithorne in regards to the cattle markets. I'm pleased now to continue our conversation in a slightly different way. We're going to switch over to feed grains now on the feed side of the markets. I've worked with David Lea for over a decade now. We've done many transactions in the past. And David, I'm excited to have you join the What the Futures podcast this week. I'm not going to say that what we're going to talk about is going to be necessarily uplifting and positive and exciting, but it's exciting to have you here joining me on this week's episode. So welcome to the podcast. How are things going in Lethbridge?
Thank you very much, Ryan. It's a pleasure to join you in this podcast. It's something that's new for me, but like you said, I'm glad it's you that's inaugurating me into the world of podcasts, since we have worked together for so many years, and it's really wonderful to be able to work with you on this here. So hope I can bring some decent information for you.
Well, 100% you can, because what I find, Marketplace Commodities and yourself specifically, you guys, you talk to a lot of people. You're on both sides of the trade or the market. You're covering a lot of ground, and I know that even weather, it could be weather related or rain or no rain. We have had a lot of different conversations over the years, but you guys are just a wealth of information. And so that's why you're on the show this week, because I want to find out what is going on with feed barley right now. What's the story?
Well, yeah, like it's quite an interesting market. I mean, boy, since June, it's been a little bit dreary, I suppose you'd say. We've probably lost, over $100 a ton since maybe June. So it's been riding a little bit of a downtrend, that's for sure. Interestingly enough, just I guess some general market info is, we're seeing very limited producer and seller engagement right now across the prairies. However, sometimes we've got to think outside of our current area. Like, I have seen engagement surprisingly from the U.S. seller. Like I've bought barley this week all the way down into Montana, all the
Okay.
way down to actually Bozeman, Montana. And a lot of inquiries as well. The Montana growers, which we attended this past week here. In fact, we've got 2 guys that are in attendance right now. I've had probably at least 15 to 20 inquiries on corn out of different areas and barley. So the U.S. grower has a little different mindset than the Canadian farmer, and I'm seeing probably more engagement from them this week than the Canadian farmer.
Okay.
Quite a few inquiries on what price is doing here in Canada, but not a lot of action. The producers down there with their rejected malt or something like that, I guess I'd say quite an aggressive seller, actually. So
Yeah. I could see that. Corn yields, it sounds like maybe performed better for a lot of farms as well than expected. And I'm thinking the low river system probably plays into it as well. Of moving product out of the U.S. can be a challenge in certain areas. So, are you seeing a fair amount of corn trade yet into southern Alberta? Is that still a theme that continues on?
yeah, very, very much so, Ryan. And I think you hit the nail on the head there too, with the Mississippi so low right now. We're definitely and the general export market under a lot of pressure globally. I mean, you got to remember that the U.S. produces so much corn that they can, the way that they look at us up here is, oh, hey, why don't we just fill that market up, and then we'll move on with whatever else we need to do. Like
Yeah.
we're really just a drop in the bucket for them, and it's actually become a problem. Like, and maybe I'll just diverge for just a second here. Like at Marketplace Commodities, corn is a real risk to us. We do not import unit car trains of corn ourselves, and so corn is, we're barley traders for the most part. We like this corn is not something that helps us. But I'll see, for example, elevators that have retrofitted their corn ability to where they now bring in 150 unit car trains, and they will have that unloaded and reloaded with wheat to go to the coast in about 8 hours, an 8-hour
Wow.
turnaround. And so you're talking well over 10,000 ton. And the U.S. seller, again, on corn is very aggressive. They will book, back in August and September, when the barley market started to kind of turn, they were booking guys from November all the way out to July. And so when November 6th hit and those first corn trains started to roll in, the effect on our market was felt almost immediately. It was like night and day when those first trains started to roll in. We really felt it, and we have felt it ever since. So,
On that note, I was chatting with a grower the other day, farms just outside of Provost, Alberta,
okay.
and he was looking to sell some spring wheat. And for some reason in that moment, Provost, Richardson Pioneer, downtown Provost, was the highest price that I could find across the prairies. Like, just looking around, doing some research for the show here, and I was like, why is that's not normal? Like that, usually there's a bit of a discount in that area, because if you farm in that area, you'll know that the next elevator is a fair hike. You got to load it up and go for a tour. So that location traditionally is not the highest price. But we found out that they had done their third unit train of corn, and they were backfilling it with wheat, and
Oh.
couldn't had to pay up to fill those cars, but dumping corn and loading wheat, and worked for that guy that day. He got a pretty good price in Provost, Alberta. So
There
so
you
that's,
go.
yeah, there you go.
Well, that's definitely a positive side of it.
There's tiny little silver lining there. Yeah.
That
Yeah.
it definitely is a silver lining. You've got a good way of finding those silver linings, Ryan.
I wanted to chat weather as well. Like
Okay.
weather for getting stuff done on the farm is good, but what's this good weather doing to our feed demand?
Well, November, December, it really does help the demand for feed grain when you have some disruption in deliveries. It can just start almost like a cascading effect where, if a delivery doesn't show up for one guy, then, or you have a weather event, it just inevitably makes it starts a trend that almost kind of feeds on itself a bit. So you can get a bit of a rally. But, our 2-week forecast right now, like next Tuesday, so almost like a week from today, we've got a 10 degrees Celsius in the forecast.
Yeah.
And so it's also playing against us in that deliveries are on time. So if you think about this,
Right.
in our area, a trucker, which if he has to go up to, say, central Alberta or northern Alberta or into Saskatchewan, he can maybe knock off 1, maybe possibly 2 loads of barley in a day. But these guys going to the elevator, they get loaded corn so fast and then back to the feedlot, they can sometimes do 3 or 4 loads in one day. And so with the weather also being this good, I mean, guys are at the top of their bins. They're at their top of their storage that they've rented in some cases. And so it just makes it, the only way a buyer will pay more for grain is if they can't find it, then they'll bid it up. And so we're just not seeing that pressure yet.
Yep.
Now, I'm not saying that won't change, because it can certainly change. This is Canada.
Yeah. Oh yeah.
It's Canada. So it can certainly change, and it can change fast, but it just hasn't changed yet.
Okay.
So
All right. I know you guys deal with a lot of different commodities as well. I know you focus on the barley, but is there anything in your portfolio of what you guys buy? Is there anything that maybe shines a little bit more right now, or anything that stands out that's in high demand?
Well, to be honest, I personally think, and I really think that right now feed wheat is probably one of the better commodities myself. If it was me personally, I'd probably look at unloading some feed wheat into this market. Like, for example, in central Alberta, central eastern Alberta, I've been able to pay up to around $8.50 a bushel picked up on soft white wheat, which from what I'm hearing on hard red spring is actually quite a decent spread. So I think that's kind of a silver lining that I would look at. Any of the wheats or even, the canola has been pretty good. I've found that most guys, if they're not selling barley right now, they're looking to sell canola or wheat, and just kind of see what barley does in the new year. So I think those are probably what I would suggest, or maybe the standout. Feed. I mean, milling wheat is somewhat, is not really a feed commodity. So, but those commodities seem to maybe suck up some of the selling right now for the producer, I think. So,
yeah, you bet. Okay. Those are good comments. One last thing here.
Sure.
What about fall of 2024? Do you have bids for that far out? And have traded anything there lately?
Yeah, I have done a little bit. Not a lot of producer engagement so far, but actually the fall 2024, the bids that I'm getting, like right now for, call it December, Jan, Feb, I'm seeing cash Lethbridge at around 305 per ton. I've seen bids all the way as low as about $280 a ton from actually kind of some of the larger guys that are still using barley. So
Okay.
I kind of think in the near term we might actually drop under 300, which we haven't seen since probably 2020, right?
Oh
So
yeah. So there's a
um,
theme here because that's happening in a lot of commodities right now. So
yeah. But on that note, I am seeing like September through December bids at around 300. I did
okay.
trade some into the low 300s 2 weeks ago. So it's actually almost a push all the way out till the new crop. And
Yep.
so you can lock in some decent new crop values right now. I suppose if you feel like that's a decent new crop value.
Yeah.
I
Yeah.
I tend to think it is, based off the corn prices that we're seeing forward.
Yep.
So you know, I have heard seed sales are down on barley.
Yep.
I talked to quite a few seed growers and seed sellers as well. So keeping an eye on that. So maybe expecting a bit of a smaller barley crop next year. So
Yeah. I'm hearing the same thing. Definitely. Um, yeah, I like doing a little bit of math. I've been knee deep in my um, cost of production and getting everything tweaked here the last couple of weeks. And
okay,
of course, we start doing our planning in the summer for the next crop year. But doing a little bit of math at the kitchen table and figuring out margins for next year and working that
okay,
backwards. If those numbers work and are profitable, I think you're crazy not to take a look at that, or a strong look at it. So anyway, I'll digress from there. Okay, how can people get a hold of you, David, if they want more information on your pricing or more information on Marketplace Commodities? How can they get a hold of you?
sure. Yeah, you're more than welcome to give me a call anytime. I'm at the office from 8 a.m. till 5 p.m. Mountain Standard Time.
Okay.
Pretty much every day, sometimes just till 4:30. So our office number, you just call in and ask for David. That's at the 403-394-1711. Or you can always call me on my cell or text me. I'm happy to work that way, whatever's most convenient. 403 795-2954, or by email as well. I have a lot of guys that just drop an email, and I can send you my updated pricing. We don't really post. We've tried in the past to post our prices online, but just given that we're not like a single elevator, we're trading these prices from all over the province. It doesn't work well. So usually to just get a hold of me, I'm happy to just give a price that way. That's usually the best way to do it. So
perfect. Sounds good. People can definitely rewind the podcast to get your phone number there as well. The beauty of a podcast, right?
yeah,
So that's great.
that's right.
And so I promise this is just the final comment.
Sure.
So my father-in-law, he doesn't farm a whole bunch, but he farms a little bit. And I begged him to sell his feed barley in September, like hands and knees begged him to sell his feed barley. And he listened to his son-in-law. He did. He actually listened to me. And I think I'm going to be invited for Christmas dinner. And I'm maybe he'll have a bottle of whiskey for me. I'm not sure this Christmas, but he's like 50 grand to the good today on his barley, and it's been long gone. So I think I'm in the good books. I hope Santa's paying attention to that one. So, but anyways, David, thank you so much for joining me. Look forward to doing this again on a consistent basis. And hey, maybe next time we get together, there'll be some positive updates for the folks tuning in. So we'll see. But thanks a bunch, man. Appreciate it.
You bet. Sounds really great, Ryan. Appreciate it very much.
Well, thank you to both Ryan and David for joining episode 6. That's just fantastic content to get out there, and I hope that you found that helpful. They will be regular guests on the show here moving forward. So I guess for wrap up here, I'm working on a couple of blog posts and website updates, so stay tuned for that. Just trying to get the website snuffed up here a little bit, and trying to get a weekly blog going as well. So something to complement the audio here on the podcast. Next episode 7, are still a little bit unclear on who's joining us, but it sounds like we might be chatting with an ag lender or two. Might talk interest rates on crop input loans, things like that. So just trying to firm that up here before the end of this week. And if you're looking for some What the Futures merchandise, I've still got some hats, a couple different hoodies, a crew neck, a few t-shirts left as well. And of course, our coffee cups and coffee, we have some of those. So if you're interested in any of that stuff, send me an email. I am going to do free shipping here into the holiday season. And the next time you see me, I will be in costume wearing an elf outfit. I am still not sure how I roped myself into this situation. You can't see it right now, but the elf costume is staring at me from the floor here. So stay tuned. Ryan the Elf coming at you sometime in the next couple days. All right, folks. That's it for Positive Friday. I hope you enjoyed the episode. I'm out.